Oil prices drop as Trump's trade tariff deadline approaches. Imagine the global oil market as a giant seesaw, constantly shifting with every political move and economic report. On July 31st, oil prices took a dive as the looming August 1st tariff deadline set by U.S. President Donald Trump cast a shadow of uncertainty over investors. The market was already on edge, with countries yet to negotiate a trade deal with the U.S. facing an impending deadline. But here's where it gets controversial. The U.S. has already secured trade deals with 2/3 of its top 18 trade partners. But the remaining countries are left in limbo, waiting for the White House to outline the terms of trade by the end of the day. Trump announced an extension of the existing trade deal with Mexico for 90 days, aiming to finalize a new agreement during this period. However, the news of this extension weighed heavily on crude futures, as analysts like John Kilduff from Again Capital in New York pointed out that tariffs are generally negative for future oil demand. And this is the part most people miss. The extension essentially kicks the can down the road, delaying any immediate impact on oil prices, but adding to the overall uncertainty. Meanwhile, U.S. inflation surged in June due to tariffs boosting prices for imported goods, which could delay the Federal Reserve from cutting interest rates until at least October. Lower interest rates typically reduce consumer borrowing costs, potentially boosting economic growth and oil demand. On the production front, U.S. crude oil output hit a record 13.49 million barrels per day in May, according to the U.S. Energy Information Administration. However, U.S. crude oil inventories rose by 7.7 million barrels to 426.7 million barrels in the week ending July 25th, driven by lower exports. This unexpected build in crude stocks was a surprise, but a significant draw in gasoline stocks indicated strong driving season demand, resulting in a neutral impact on the oil market. Fujitomi Securities analyst Toshitaka Tazawa noted that while the inventory data was surprising, the gasoline draw supported the view of robust demand during the driving season. The threat of U.S. sanctions on Russia has also played a role in supporting oil prices this week. Trump announced new measures, including 100% secondary tariffs on Russia's trading partners if it did not make progress on ending the war in Ukraine within 10 to 12 days. The U.S. has also warned China, the largest buyer of Russian oil, about potential tariffs if it continues its purchases. India's state refiners have reportedly avoided Russian crude in the past week, following Trump's warnings. Additionally, the U.S. Treasury Department announced fresh sanctions on more than 115 Iran-linked individuals, entities, and vessels, escalating the Trump administration's maximum pressure campaign. So, what do you think? Will the tariff deadline and trade negotiations continue to sway oil prices, or will other factors like production and demand take the lead? Share your thoughts in the comments below. Trump's tariff deal with Mexico, a 90-day postponement. Imagine living in a world where trade agreements are constantly on the edge of collapse, with billions of dollars and countless livelihoods hanging in the balance. This scenario becomes even more real when considering U.S.-Mexico relations lately. The ongoing tension between these two countries has taken a slight breather as former U.S. President Donald Trump decided to hit the pause button, extending the deadline for imposing higher tariffs on Mexican goods by 90 days. But here's where it gets controversial. How much does this delay truly benefit either nation? And what could be the potential long-term implications? After engaging in an extensive 40-minute phone conversation, both Trump and Mexican President Claudia Sheinbaum came to a temporary consensus, agreeing to push back the tariff increase. This move allows both nations additional time to negotiate a broader bilateral agreement that touches not only on trade, but also critical matters of security and migration. In his usual style, Trump took to social media to share insights about their talk, describing it as very successful because it fostered better understanding between the parties. He highlighted the unique challenges tied to dealing with Mexico, due to the intricate dynamics at their shared border, which presents both opportunities and obstacles. On her end, Sheinbaum hailed this postponement as a testament to her approach of quiet diplomacy, a method emphasizing calm public discourse while making significant compromises behind closed doors. During a press event, Sheinbaum expressed satisfaction with the outcome, calling it the best possible agreement. She pointed out two crucial elements. Firstly, there would be no immediate rise in tariffs, unlike other global deals. Secondly, it ensures the safeguarding of the USMCA, United States-Mexico-Canada Agreement. Yet this is the part most people miss. Despite the celebratory tone, a hefty 25% tariff remains on non-USMCA Mexican products, ostensibly aimed at curbing fentanyl smuggling. Additionally, steep tariffs persist on vehicles, steel, aluminium, and copper. Trump emphasized future cooperation, focusing on border security issues, including drug distribution and illegal immigration into the United States. In return, Mexico agreed to dismantle numerous non-tariff trade barriers, marking progress in their economic relationship. However, just weeks before, Trump had issued stern warnings about imposing a punishing 30% tariff if satisfactory terms weren't reached by August 1st. His letter from July 12 acknowledged some improvements in reducing migrant flows toward the US-Mexico border, but accused Mexican cartels of turning North America into a hub for narco-trafficking. This episode encapsulates Mexico's recurring pattern of striking last-minute deals with Trump, each time celebrating them as victories. Meanwhile, White House Press Secretary Caroline Leavitt noted an uptick in collaboration with Mexico concerning security and migration. She affirmed continued efforts towards fruitful discussions while acknowledging Mexico's recent steps forward. To ratchet up pressure before the looming deadline, the U.S. administration resolved old disputes such as aviation disagreements, suspended anti-dumping protections on tomatoes, and sanctioned 3 banks over alleged fentanyl breaches. Despite these tensions, Sheinbaum insists on a respectful relationship with Trump, asserting mutual regard during every interaction, even amidst disagreements. Interestingly, Canada adopts a markedly different stance toward Trump's demands, often taking a more confrontational approach compared to Mexico's quieter strategy. Diego Marroquín Bitar, a trade expert from Mexico, notes that regardless of varying tactics, outcomes tend to align similarly for USMCA-compliant goods. He cautions against prematurely labeling any development as a win until final details emerge within the wider framework under negotiation. Analysts harbor mixed feelings regarding the 90-day reprieve. While some appreciate avoiding immediate tariff hikes, others worry about lingering uncertainties amid economic struggles. Brenda Estefan, a professor at ALPAD Business School, suggests that Trump uses this tactic to keep pushing Sheinbaum's administration on sensitive issues like fentanyl control. Nevertheless, she argues that the U.S. benefits significantly from maintaining stable relations with Mexico, preventing harsher measures. So, what do you think? Is this extension merely buying time, or does it signal meaningful progress? Do you believe Mexico's diplomatic strategy will yield lasting results, or is confrontation inevitable? Share your thoughts below. We'd love to hear your perspective.